But the markets really seem to be stuck in a bit of a range at the moment, with a negative bias on the local front at least.
Correct, Stephen. The markets seem to be taking a breather. It's been a tough week of trading with the different economic news that we've been seeing. Some investors quite hesitant to really enter positions until this afternoon. We have CPI and University of Michigan numbers out today that will hopefully give some directions to the US markets. As we saw, they closed fairly flat overnight.
Well, as you said, some investors hesitant to take positions. We had Investec Asset Management yesterday. That's one of the country's larger asset management companies, taking a fairly dim view on South African equity. So saying, yes, we've had a pretty good run over the past year, but the next couple of years don't look nearly as promising for our equity market.
Correct, Stephen. We also saw earlier out in the week where Sanlam came out to say they're going to be reducing their local equities and rather focusing on international global equities, especially in the Eurozone. South African stocks have had a good run, and we've seen some speculation that we're going to see growth coming out of developed markets. We hinted at that towards the end of last year, and we started to see that, especially with the continuing earnings and company results that we have seen going forward. However, emerging markets are still continuing to grow at a sustained pace. However, we'll have to see how South African equities really do perform the rest of the year.
Well, in light of that, we had Clicks out with half-year numbers yesterday, and those numbers really coming in line with its very own guidance of 22.2%. And yeah, we saw that share price battered a little bit yesterday, down by 2.7%. So it looks like if you are taking a dim view of South African equities, even when companies meet their own expectations, it looks like they are punished a little bit.
Stephen, I think looking at those numbers, their results did come in line, but what was highlighted was their sales numbers for the last 2 months have come off. So it looks like the trend is they're not able to maintain those sales numbers. They have come under pressure, and they will come under pressure with Dis-Chem really increasing their strategy and looking at really taking bites into Clicks dispensing section, and they're really Dis-Chem is rolling out more stores. So Clicks, perhaps a retailer that is going to be coming under pressure for the rest of the year. However, the rest of our retailers seem to be performing fairly well at the moment.
Yeah, that's right. We have Truworths up quite nicely today. Pick n Pay also going against the trend on the local market. So it looks like investors are finding some value, at least probably foreign investors finding some value in this retail sector still, following that sell-off we saw late last year and into the beginning of this year.
Correct, Stephen. Our credit retailers have been performing really well. We saw them over the last period of last year. We did see them taking a dip, as a lot of our stocks in March, but they have come back and they are still performing. Truworths, Truworths really has had a good mix of products, so they have really performed better than some of their counterparts. Foschini also has changed their mix and has really come out there. We saw Woolworths earnings pretty much better than what the market had expected. So there are some pockets of light in the retail sector that are going to perform. We are seeing Shoprite, however, slightly low on the day. It's above 100 Rand. So that stock seems a little bit stretched over 100, but below that, it's a good buy.
Well, also apparently some pockets of value in the resources space, and that particularly in the gold sector, because we saw those gold stocks doing very nicely yesterday, putting back a little bit today, but we had an all-time high Rand gold price yesterday because that weaker Rand and the firmer gold price really playing in their favour.
Correct, Stephen. We have seen, I think what was disappointing this week is we saw the mining data coming out with gold production really pulling back. Our gold stocks have really benefited from the higher gold price. I think South African investors must, however, be cautious, because even though we're seeing a higher gold price, our production numbers are not really meeting the targets. And as we saw early this morning with Harmony coming out to say they're not going to be making their production target. But however, if we continue to see global concerns about inflation and the higher gold price, and we are able to perhaps maintain our current production levels, and we do maybe change and make a turnaround in those numbers, we could see our gold miners performing much better later in the year.
Bits of negative sentiment towards the rest of the commodity sector, though, because we had Goldman Sachs earlier this week advising clients to take a little bit money off of the table, saying that those commodity prices could pull back. We've also seen inflation numbers out of China this morning, 5.4% year on year, and that's against a backdrop of very strong growth in the Chinese economy, which could point to towards more monetary tightening, and again negative for commodities.
Correct, Stephen. There is speculation that we could see those reserve rates being increased as soon as this evening, and that really we can see the consensus, the global sentiment that is definitely going to be pulling back commodity demand coming out of China. We saw in terms of China, their property stocks have all pulled back, and we see that reflected in the copper price that we've seen in, now down 4 days in a row. So definitely, however, gold has definitely performed contrary to that, because it is an inflation hedge, and with the concern of inflation, as we've seen out of China, beating expectations, that we are going to see gold reaching higher levels in the short term.